All right, you're welcome, ladies and gentlemen. Welcome to the Prince World Academy. My name is Prince Ikilowe, and today we're going to dive into a very powerful topic. The topic is all about how to use Fibonacci to trade your market. How to use Fibonacci to trade. Fibonacci is one of the one of the best trading tools that people overuse. People don't know. Most people don't know about it. I know about Fibonacci trading myself for long, but at the point, I stopped using it. But recently I discovered that Fibonacci is an indicator. Fibonacci is not an indicator, but it's a very powerful, tool to measure a trending market. So in this video, in this training, I'm going to show you how to use Fibonacci. For those of you who are watching on YouTube, I want to welcome you to La Print World Academy. And as usual, I want to encourage you to stick to this skill set. For most people, the reason why they are not successful in trading is because they are not committed to it. But if you want to succeed in this business, you need to be committed. Commitment is very key. A lot of people, for me, they have not really made a decision about what they want in life. Let me talk a little bit about decision. If most people will say, I want to trade the market, I want to become a forex trader, I want to be rich, I want to be that. Those are just, I call these wishes and cigarette smoking goals. When you smoke a cigarette, it comes out of your mouth and it dissolves on the air. It has no concrete, it's not, you don't see it anymore. The air disappears immediately. You don't see the hair after it comes out from the mouth. That's how most people treat life. Most people only have what I call cigarette smoking goals. It doesn't have any substance. It doesn't have any ground. You know why? Because they are not committed. But as I study successful people, as I study wealthy people, one thing I discover is that these people are people who have visions, all right? Who make a decision to say, this is what I want. I want to become a profitable forex trader, for instance, and they write it down. That's why you need to write your goals down. A man without a goal, the Bible says, will perish. If you don't have a goal, you will perish. So successful people write their goals down. And once they write their goals and their visions down, they're not like the unsuccessful people who just talk. Most people love talking. All right. You don't become successful by saying it, but you become successful by doing it actually. When they write these things down, once these things are written down, every single day they take daily action. If you want to become a profitable forex trader, you have to make up your mind to take daily action. What are you doing every day that leads to forex trading? For me, every day, even if I'm not trading, even the days I don't trade, I still look at my market. I'm still watching the market, how it's going, how it's turning, the candlestick as they are printing. I'm watching them. That's success. Success is not doing something once in a while, but success is committing yourself to say, I'll do it. Most of us, you know what? We are interested, but our problem is that we are not committed. When you're interested, you do what is fun and easy. All right? You look for signals to take. If you don't see signals, you don't have time. You look for, once in a while, you just attend one or two meetings. Once in a while, you watch one or two videos. You are there, and the next thing, you tell yourself, Forex doesn't pay me. I'm no longer going to trade Forex again, and you give up. That is lack of commitment. It's not because Forex doesn't pay you, it's because you don't really understood the power of commitment. All right? So I want to encourage you as you strive to become a profitable Forex trader to be committed. Know what you want. Most of us don't really know what we want. So if you don't know what you want, you won't take the business seriously. But those who know what they want, who have taken it upon themselves that, look, I want to become a profitable forex trader, because they know that they want this skill set, and that's what they have decided to do. They take daily action. How many videos have you watched about Forex each day? What books are you reading to trade Forex? What are the books are you reading to even guide your mindset? Because the Bible says, be ye transformed by the renewing of your mind. As a man thinketh in his heart, so is he. It's not going to be your, it's not, you can't become successful in this industry or in anything by doing it once in a while. You need to give yourself commitment. You need to take daily action, day in and day out. You are all in for the game. That's how you break out of the mediocrity. You are in, even if you're failing, it doesn't really matter. Most of all, our common challenge is that we allow our temporary mistakes, our temporary failures to stop us from going ahead with the vision. All right? Thomas Edison, remember, failed 10,000 times. Ladies and gentlemen, 10,000 times. But Thomas Edison didn't give up. Our major problem for lack of commitment, for lack of taking consistent action is because of failures. We don't see instant result. You know, we are used to fried food restaurant mentality. We want to make money today. If we don't make it, that business doesn't work. No, that's wrong mentality. You want to treat Forex as a business. All right. There are some business 1 year you won't see anything. 2 years you won't even see anything. 3 years you're still using your money to fund that business. I've been into that kind of business before. For the first 2 years of the business, I gained nothing. Meanwhile, this is a business I spent millions of naira to develop, to build, right? I spent millions to build, but for the first 3 years, nothing happened. So Forex trading is same thing as every other business. For the first 1 year, for the first 2 years, for the first 3 years, even sometimes 5 years, nothing still happened. But those who succeed are those who have the right mindset, are those who believe that, yes, it is possible, are those who understand that success comes later, it's not immediately, are those who understand the principles of success, which is perseverance. One of the principles of success, which is perseverance, are those who understand the principles of success, that learning is one of the principles. So you need to be committed. You need to be serious about the business. That's my message for you today. You need to be serious. You need to be committed. You don't have to wait for La Prinzo to call you to come and learn. You can be on your own, go to the academy and watch. Watch as many videos as possible. All right? Watch other videos. Watch other people's videos. Get more mentors and keep learning. All right? My goal for you is that in the next, La Prinzo is just La Prinzo World Academy is a starting point for you. It means that you have joined the academy today to just for an eye opener, just to open your eye that look, this is the skill that can make you rich. All right. Now you need to take it upon yourself. You have to do things in a certain way. There's a book by Wale Z. Watos. Wale Z. Watos is one of the, then before he died, one of the great men, one of the great authors in America. He wrote a book called The Science of Getting Rich. He said, if you want to be rich in anything, you have to do things in a certain way. So my prayer for you tonight is today, wherever you're watching me from, is that you should take trading business like the way Wallace do want to describe success and reaching. He said, do things in a certain way. Go crazy about it. Be hungry for this knowledge. It means that every day you are going to set aside time to be learning about the business. It means that every day you must make a decision to risk money to trade. You go demo to learn, but you risk money to trade as well. You have to have that commitment. You have to have that mindset that, look, I'm learning a skill set. It may not pay. Don't put the money in front first. Some of us, because we have house rent issue, that's why you are trading Forex. Once we are not able to make that money to pay the house rent, we give up that, look, Forex doesn't work. No. Successful traders are veteran traders, meaning some of them have been there for 10 years, 20 years, even 30 years. I met a guy who has been there for over 40 years. He's an older guy now today. He's teaching people. He's a mentor. He said for years he has never deposited money into his trading account. All he has been making is profit. But the first few years wasn't like that. The first 5 years wasn't like that. It was not in profit until years later. So I want to encourage you strongly to dedicate yourself. See this skill as a long-term vision, as a long-term goal, not a short time. Don't allow failures, distraction, losses to distract you, discourage you. All right. If you lose today, you come back again tomorrow. If you lose today, come back again tomorrow. If that week is straight up losses, stay away from the market for some days. Just be learning, just be watching the videos, just be reading the books, and then you come back again. Learn from those losses. You don't run away from losses, but you learn something from it. So, guys, that's my honest, advice for you this morning, this afternoon. Please, let's get down to the business of the day. How to use Fibonacci retracement to know the movement of the market and place your trade. So let's get started. Are we together? If you're together, can we type yes, yes, yes? Are we together? How many of you are with me tonight or today? How many of you are with me today? Are we together? If you're with me, type yes, yes, yes. Are we together? Like, we don't have people here. Like, none of you guys are here. Okay, Mr. Caleb, yes, yes. Okay, good. Okay, it means only Caleb is in the house. Oh my God. All right, so Caleb, you're welcome. And all the people who are in the house who are not still talking. But I want you to interact because you can't be in a room and you're not communicating. If you're not communicating, it's simply meaning that you are not actually participating. All right, I can see Prince Will, I can see Soft Money, I can see network is low. Oh, sorry about that. All right, good. So now let's use Fibonacci retracement to analyze this market. Now Fibonacci retracement, let's even look at the definition about Fibonacci retracement, right? So you know what Fibonacci retracement is all about. So let's get to seeing the definition of Fibonacci retracement. So after understanding Fibonacci retracement, we'll now all right, so let me share my screen about Fibonacci retracement. You understand what Fibonacci retracement is all about, right? It's not just something I'm just talking, but you should know yourself. You should know the importance of Fibonacci retracement. All right, strategies for trading Fibonacci retracement. So based on the Fibonacci sequence and the golden ratio trade, okay, let me go back to the Fibonacci retracement. Fibonacci retracement is a technical analysis method that identifies potential support and resistance levels on a price chart. It is based on the Fibonacci sequence and the golden ratio and is used to predict where a price might stall or reverse during a trend correction according to investment Tobia. So what it means is that Fibonacci is primarily used for a trending market. So for instance, let me give you an example of how we use Fibonacci retracement. This is, okay, let me give for V75. For instance, this is an uptrend, all right? A downtrend rather. This market has been on a downtrend. If you look at this market, even on a daily time frame, you will see that the market has been coming down, right? On the daily time frame, the market has been coming down. It broke this uptrend movement. Now the market has been doing higher high and higher lows, coming down. Now look at the 4 hours time frame. So what this market does is that when the market is going down, let me start from here. Let me start from the pullback from here. Look at here. The market went down, all right? From here, the market was coming down. It broke this downtrend. Now, when you see a market move like this on a down market, you only use it when the market is trending, either upside or a downside. For instance, this was a sell movement that happened. Now, for you to use the Fibonacci, you want to see a sell movement, what you simply do is to drag. This is a Fibonacci retracement. You see, draw Fibonacci retracement. Click on the Fibonacci retracement. This is the beginning of the trend, all right? So once you put the cursor here, you drag it to the end of where the retracement, remember this is the movement. This is where the movement starts. So you put it here and then you drag it to where retracement start happening. So once you see a pullback start happening, most of the time, especially indices, Fibonacci retracement, we have 23.6 levels, we have the 38.2 levels, we have the 50 level, we have the 61.8 level. If a trend is reversing, once a trend gets to 100% level, if retracement go to 100, get to 100% level, know that that trend is over, is reversing. But if the trend is still on this 28, 23, 50, and 61, the market is good to go. You can see sell. For instance, if the best for me, in my own opinion, for indices especially, you have a better entry when you use 61.8 percentages. Because sometimes you see a market to fall drastically. After falling, you see a pullback. You will be thinking the market has changed level. But if you plug your Fibonacci retracement, you will know that until it changes above 61.8 levels, the market is still in the right direction. For instance, let's say this one here. Let's say this is what, look at here. This was a pull, this was a downturn, right? After this movement happened, if you plug your Fibonacci from this level, all right, you plug to the level to this particular place. This place was where the Fibonacci started, the market started tracing. So you now plug, once you see a retracement start happening, how do you plug is the swing, the last swing high or the last swing low. For instance, this was the last swing high in this downtrend, lower high. All right, this is the lower high. Some of the best time frame. You can use time frame, even if you are using 5 minutes time frame. Like for instance, I'm using 4 hours because I want to see the market based on 4 hours time frame. So even if you're using with 1 hour time frame, it's the same principle. All right. The best time frame to know if the market is trending upward or downward is daily 4 hours. When it's 4 hours to see the market, you can cash in for good pull. Fibonacci allows you to enter the market with good price, so you don't get stopped out because of, you know. So let's say you enter from here. Let's say the market pull down. It's an uptrend, right? Downtrend. The market pull, you miss all these ones. No while, just allow the market to going down. This is where the retracement start happening. So you have to plug it, you have to put it there, put it there, and then drag it down to wherever the movement start, the changes, all these changes you start seeing. So if you don't have this tool, if price start behaving like, you see what is happening now? If price start behaving, okay, this is the beginning. Okay, if you don't have Fibonacci levels now, if you don't have the Fibonacci level, if price after pulling down, after going down, then all this movement that you see here, when you see market get to this level, you'll be thinking, because of this, your trend line you're seeing, you'll be thinking, okay, market wants to return from here. You see this red here, you think market wants to return from here, you sell to continue the downtrend. It will hit you out, it will take you out. But if you have Fibonacci retracement put in place, you will know that this 23.6 is still low to sell. Even 38.2 is still low to sell. For me, what I've seen, when I backtest Fibonacci retracement, the best place to sell, especially for indices like this, is the 61.8. This is 1.8 level. be patient enough. All right, be patient. Use this tool, you will thank me later. Be patient enough to allow this Fibonacci, this market, after this swing low, this swing, this high, this low, this high here, you drag it to this point, allow this pullback to happen. Don't be in a hurry. Just keep your computer plugged in this Fibonacci retracement. Once you get to this level, that's when you look for trading decision. Not that if once you get there, you just sell. No. Once you get to this level, sometimes it could even break out. Like now, it broke out of this level to over, it passed it, got up to 70 level, right? But this is when you now look at for, you know, decision to whether I'm going to buy or sell. Yeah, this level. Not from here. All these places you are see too early. The market will still collect all your money. It collects money from people who try to sell from here. You see, because of this trend line, right? Because most time the price will even take over the trend line, give you a new high. You think the market is not going to the upside? No, the market is not going to the upside. Traders who are using Fibonacci are calm. They just drag it to this low, from this high to this low. They are waiting for the market to get to that Fibonacci level. That's when they make a decision to sell. Deriv will show you. People will think that the market is not going to the upside. You see, they're doing high and higher lows, but for where, if you have Fibonacci put in place, once it gets here, 61.8 level, that is when you can even draw this here counter trend line. At that level is when you begin to draw your counter trend line that I've also taught on this platform. All right, because you know that if it passes that 61.8, goes to this 100%, know that the market has changed direction. If it change to this 100%, know that the market has changed direction. If it change to this level and then pull back, if it doesn't go back, know that the market may be changing direction. So that Fibonacci will help you stay calm in the midst of all this noise. In the midst of all this noise, let's go to 15 minutes time frame. You'll see what will happen. Now, 15 minutes time frame will show you that the market, 1 hour, to show you that the market is doing higher high and higher lows, higher and higher lows. You may be thinking, okay, the market is now an uptrend. You draw your trend line, right? Draw your trend line. You're waiting for the market. You take it an uptrend. You are buying, you are holding. Your stop loss is somewhere. Before you know it, the people who are using Fibonacci, it got to that 61%. That is where they expected the market to turn. As it got there, that's when they draw their counter trend line. You see? Now, so you must have drawn this counter trend line once the market break out and retest. That time, you cannot comfortably take the trade because you have endured the market to get up to 61.8%. Let's give another example. Let me give another example. So you don't have the time to trade all this noise. These are noise making, it will take your money away. So you are patient. This could take you 2 days, 3 days, even if it's 4 days, no wahala. For instance, another one here, like now I'm watching this market, all right? I'm watching this market and this is where the Fibonacci level starts from. You plug your Fibonacci here, yeah. If you drag it to this place, the treatment started happening here. When you drag it from this high to this low, you now count. Now it is returning on the 61. Somewhere is getting to the 61, but I'm not still satisfied. I want it to get to this point. All right. I want you to get to this point. This point will be because this point even match with the trend line here. If you get to this point, that is the trend line too. It's going to be on the trend line. This trend line here, this is a new high it has formed, this trend line. So it's going to be on the trend line. Sometimes it may even pass this 61 a little bit. That's when I will look for, because this is not a higher high and higher low. That's when I will look for sell opportunity from this 61.8 Fibonacci trading level. You now add it to your counter trend line at that level. That's when you now draw So okay, now you have confirmation, you have tools with you. Your own tools is that number one, the market is a downtrend. First of all, you need to know the direction of the market. This market is an uptrend or this market is a downtrend. Now you know this market is a downtrend. Then the swing low, you have also plugged in your Fibonacci. You are now waiting for the Fibonacci. You don't sell all year. If you sell all year because of your seeing one candlestick, let's go to frame. All right. Let's say you see all these candlesticks here, you sell. You think maybe the market will give you, you are selling, you're holding. No. Even if it breaks out here, I'm not still selling here. If it breaks out on this candles, this line, I'm not still selling. You know why? I want it to come back to this Fibonacci 61.8 level. It is when it gets to this level, sometimes it may even push a little bit further. When I see that push, if the market is going to reverse to the upside, that means it will push beyond, it will get up to 100 level. Like it will clear this 100 level. If it clear this 100 level is when I know the market has gone this 100 level, right? If you get to this 100 level and above, that's when you know the market may be going to the upside. Then you just wait for the market to come back to retest this zone and then you buy. But as far as this market is still below this 60, I am not doing anything because most of the time you think the market is now changing direction. It's not changing direction. This is a downtrend. You see few candlesticks. You think, okay, market wants to go down. No, it's still doing what is called pullback or retracement. So with Fibonacci retracement, you have numbers you are looking at. You are looking at this 61.8. 61.8 is a very, very valid number. If you don't see it, you don't trade. Are we together? How many of you are getting what I'm saying? If you are getting what I'm saying, can you type 111? If you get what I'm saying, can you type 1 1? Now you can use this with any time frame. With any time frame. When pullback comes with this market is very, very volatile. The market will do as if it's buying. In a sell market, good. In a sell market, you will see a massive buy in a sell market. You yourself, you'll be thinking that the market is now a buy. But once you plug in this Fibonacci retracement and you are watching your levels, you will know until it crosses this 61, I am not buying, I am not selling. If you are a seller, you will see, let's say you've been following the trend from the up here, all the way from, let's say you've been following the trend all the way from here, right? When it broke out of this trend line, maybe you'll be following it to here. If you are still selling, if you are still holding, you will still, based on this pullback, you will still be holding your sell. But if you are waiting to take the sell, you want to wait for this pullback to sell, make sure. Don't be watching it with 5 minutes, 15 minutes, no. Not even 30 minutes, no. This is 4 hours time frame. 4 hours time frame has given you that the market has taken this low. So the market is doing higher high and higher low. So this is a higher low, higher low, higher high, higher low. Lower low, lower high. This is a lower low, lower high, lower low. It's going to give us another lower high. So as you are watching this market with the 4 hours time frame, make sure you exercise patience with your 4 hours. Let the market get to your Fibonacci level. 61.8 level is valid. If you get to that level, not that you will just sell, no. Wait for now your candle trend line now comes in place. So you now have a tool. Fibonacci is waiting for you now as a tool. Your candle trend line is also as a tool. So they now wait for you to break out. At that level, you can now come to 15 minutes because you're not looking for entry. Once you get to this 61 point level, all right, this is now I've drawn it already. I'm still waiting for the market to get to this level. Once you get to the level, I'm waiting for breakout and retest. Once I say breakout and retest, I'll go back to 5 minutes time frame to see a structure get broken. All right, meaning let me tell you what I mean by a structure. Meaning, like now, this is a structure, all right? So if market gets, let's say this is the 61 point level. Let's say where we are is the 61 point level. This place, let's say this place is 61 point level. I want to see this market break out on this. Not, you don't have to wait. If it's not breaking out below this structure, it is not still ready for sale. It might still be a fake out, might be a fake breakout. So you have to wait for the next structure. Make sure it's now lower time frame, like 5 minutes or even 1 minute. 5 minutes is fine. If it breaks out of this structure, it will just go down. At that level, you will now know, yes, this market, it may come back. Sometimes it may not get pure, it may not get that kind of accurate retest here, all right? But it may give you sign, maybe near the level, all right? Once this happens, if the market now struggle around this level or here or here, struggle, maybe give you, maybe now that time you can now go back to one minute time frame for your entry. So if you struggle here, maybe come down, 1 minute time frame will show you, give you some down movement, then go back again. If you didn't go back, instead of going back, if it gives you a candles information, then you now jump on the sell. That time you know that your Fibonacci, the market has got to the Fibonacci level, and you can see the market has broken the last structure, and you can see the struggle for the market to continue. At that time, you can now sell your market and take your profit, hold it from this level to, because this is a downtrend, right? So it may likely take this low. Because this pullback is what it's doing. So that's how you trade with Fibonacci. Let's use another example with Fibonacci. Let's say this one here. This one here is also a downtrend. Downtrend is happening here because this low was broken. This trend line has been broken by this market. It has broken this trend line and retest. Retest has happened and it has taken this low already. So this market is still a downtrend. Now, when you are going to start looking for pullback to buy, to sell this market, once you see a pullback, let's go to 4 hours time frame. Like now, I'm seeing some kind of movement. So when you see something like this, what you do is plug your Fibonacci retracement tool. Take it from here. This is the high. This is where the market started from. So you drag it from here. All right. You drag it from here. So we expect the market to pull back to this level to give us a new lower high. I would have said this particular level, but you need to be very careful. I would have said here. Yeah. I would have said here, but here is not a good, pause. It's not it is still, market didn't actually pull that. It was this movement is still valid. All right. This movement is still valid. There was no significant break there. So we can't say that is a major point. There was no significant break. So let's see daily. So instead, you use daily time frame with your Fibonacci level. So let's say this is your daily time frame. This is where it started from, right? So you drag it. If the market is trying to pull down from here, from where the market is showing sign of pulling to the upside, rather, you drag it like that. So we're expecting the market, because when the pullback will come, you would think that the market is now a downtrend, an uptrend, but not an uptrend. Don't chase it from here. Don't try to sell from here. Don't even try to sell it from here. Respect the 61%. Most time, if you see it here, it's somewhere rare. But for me personally, I love to sell here. I like this level. This level shows you that when the market gets to this level, is when you have a good sell or buy. All right. So let's try buyers. Let's try for buyers. For buyers example, let me give you let me give an example in an uptrend. Let me give an example in an uptrend. For instance, this is the uptrend, all right? This is uptrend. When you see the market trending to the upside, what you do is this is where trend is started from, right? You drag it to where the pullback started from. When the trend is strong, you can see opportunity on the 50, 51 level. This one is 31 level. All right. But me strongly, I like to use the 60 level because 60 level give you better. This is a downtrend as well. This is a downtrend. So let's see the level that the market respects. You can drag it here. Okay, this also respect the 50 level. This also respect the 50 level, 50 Fibonacci level. So you can use 50, you can use 50 and 61 is best used. This 38, except in a very strong trend, but all these 28, 23.6, I don't use them. 38 too, except the market is very strong, the trend is very strong. You have that conviction that, okay, but right now, if you can see 50 level, once you have this, once market get to that 50 level, that doesn't mean you should just trade, sell. You should just click sell. No, you cannot go with your counter trend line, wait for a breakout. So let's work with 50 and 61 point. But personally, I like to wait for the 60. If you want to go down from the 50, that's okay. I prefer waiting for that major pullback to happen. Because it is from that major pullback that you get good profits. That major pullback. Let's say, for example, this one here. Have we done this one? Have we done this one? Market started from here. This one too. You see the market came down to the 61 point. Market came down to 61 point. After this up movement, the retracement. So all year will not be looking for buy opportunity. People are still who don't understand Fibonacci will be looking for buy opportunity here. They buy here. Before they know it, they put their stop loss. Before they know it, market just good up a little bit, no much profit. You think you are holding for a buy market, it crashes, take your stop loss, then get to this 61 point. Now it's now going to the upside. All right, that is it. Let's see another one. This one is another one again. This is on that Fibonacci level here. See the market, yeah, market from here. I think I've done this. Started from here. Started from here. Okay, market get to 61 point, then it went up a little bit. So once it get, if you wait for the price to get to this level before you make your decision, all this trying to sell from earlier, a lot of people try to sell from all this small movement and they lose their money. So those people that are on this ride are those who have the knowledge to wait till this is the 1.8. So once you get to this 1.8 is when you can now say, okay, I am trading with my candle trend. You draw your candle trend line. Because of what? The market has respected your 61.8 level. You're waiting for the market to now break out. When it is on this 22, 28, 50, you do nothing. You are just watching the market, you are doing nothing. So that's how you use Fibonacci retracement. Please, if you don't understand, ask question. Ask question. Ask question if you don't understand. Ask question. If you use Fibonacci retracement consistently on all your trade, you will make more profit. You make more profit, more profit, especially you are only, that's why you need to only look out for a trending market. Look out for a trending market that is doing higher high and higher lows. This is a trend, like this market now, it has started doing higher high and higher low. So look for only trending market. Our market, we are waiting for this market to come to this Fibonacci level. Before what? We'll look for buy opportunity. Now it has started retracing, so you need to plug it. You don't plug it when it has not started retracing. You only plug it if the market pass below this level. If you keep going down, I will remove the Fibonacci because only 2 candlesticks is not a pullback. All right. Now I have plugged it because I'm seeing a rejection. So now I'm waiting for the market to come to this level. It will come to at that level. At that time, you may even draw your trend line from here. You see this structure here? It maybe give you something like that. So let's just wait for the market to give us pull back to this Fibonacci level before we look out for sell opportunities. Please, if you have any question, you can ask. Is there any question? I mean, if you understand what I've just explained. I mean, if you've gotten this explanation, can you type yes, yes, yes? You've gotten what I've explained so far about Fibonacci retracement, how Fibonacci retracement can improve your trading drastically. All those early entry, jumping up a trade that is not yet going up, you jump on it, jumping up a pullback that is not going up. No. Number one, look out for a trending market. If the market is going up or down, once you see a trending market, wait for pullback to happen. Let the pullback happen. As you're waiting for the pullback to enter for a buy, for instance, this is the sell market. You have seen that it's doing higher high and higher lows on the 4 hours time frame. It's selling. You're waiting for pullback after a major movement. This is a major movement. Once there is a retracement, plug your Fibonacci. Plug your Fibonacci. Once you plug your Fibonacci, watch out for, don't be in a hurry to sell 23, 28, even 50, because this market is very volatile. This market, our indices market is it can, in a downtrend, you will see market will be doing higher high and higher low as if it's now going to the upside. But the only time this market will now be up to me is when it will take this 100% high. Once it takes out this 100% high, then I will know that the market may have changed. But as far as the market is still pulling back to 23, don't try to sell. Don't try to sell. If you come to 38, don't even try to sell. Even 50, my own opinion, I'm not selling until 61. When you sell from this 61, you make more profit. If you sell from here, market may come down, take it out before coming down again. So wait for 61.8. Sometimes it may even go up a little bit. But from that 61.8 is when you look for patterns to enter the market for profitable trading. All right. So is there any question? Is there any question? Is there any question? All of you got it. Good. Thank you. Thank God you got it. Thank you. One question. Which movement average is it on there? Okay, this is just 50 period, I think 20 period exponential moving average. It's just to see the market moving. Yeah. This is so the moving average is showing you the direction of the market. These are just tools that shows you the movement. 50, 30%, 50%, 200% exponential moving average is also good to see how the market is moving. I just this is here because I'm seeing that the market is still a downtrend, right? So when the market will now pull back, it will show as if it's up, but these Fibonacci retracement levels are very, very important. Mark these levels very well, and then your trading will change. Believe me, your trading will change. All right, guys. If we don't have anything, if we don't have any of that, if you don't have question, I'm sure all of us will understand this. We have understood this particular training, Fibonacci retracement. I'm going to post this video on the channel so that you can also rewatch the video again and learn from how to use Fibonacci retracement. So I'll see you on Friday for another learning again. Bye for now, everybody. Right. Thank you.